listening to the UAE's #1 talk radio station.
This is the Business Breakfast
On Dubai Eye 103.8.
Right, time to get into Property Monitor's latest monthly market report. An interesting one as well, because it takes into account the summer. Let's get more on what the data has told us from the COO of Property Monitor and Director of Market Intelligence and Research at Cavendish, Maxwell. Zan Johinke joining us live here in studio. Zan, always good to see you. Thanks for joining us. Good summer?
Yeah, not too bad. It's been a good one. It's been a hot one.
It's been a hot one, and it continues to be a hot one at the moment. I suppose that leads us nicely on to the readings of the latest monthly report from Property Monitor. We have the age-old phrase, don't we? The summer slowdown. Tradition says no one's here. No one's coming here, it's too hot, etc. Has that followed suit this year?
It has not. It has not. That humidity you said that you were seeing on the roads, I mean, you might not be able to see how hot it is in the real estate market, but it is a scorcher. So normally we would see a summer slowdown. So if you look at the last sort of 5 years, that sort of, we ramp up to sort of June, transactions kind of peak, and then they taper off for the next 2 months, or at least for the next 6 weeks. The thought behind it has always been you've got people travelling. They're not here, so people are trying to get those deals in really quickly before they go, and then they try and get them in before school starts. What's interesting is that we've always had Ramadan around summer recently. So the last sort of 4 or 5 years, that time frame, Ramadan's hit right before, right during, right after summer. Now we've got an earlier Ramadan, right? So we didn't really see a Ramadan slowdown, and I think it's also part of the reason we haven't seen a summer slowdown, but not in itself. The market, like I said, it is hot. We had last month just over 12,000 transactions. Pre-pandemic, we're looking at 2,000, 3,000 transactions a month. We're up about 41% of the same time last year. Last year was a banner year. And we're on track to well exceed the all-time record of about 100,000 transactions. We're likely going to see 120, 125,000 transactions if this pace keeps up.
Which is not, I mean, if you'd been sat there 4 months ago when we were talking about, you know, perfect tourist season, we're talking about the fact that the weather's lovely, etc. Records are breaking left, right and centre. Yeah, there's plenty of evidence for that. But August?
Yeah.
August?
I wouldn't have called it. I don't think many would have called it either. If you look at what's underlying between it, off-plan has regained dominance of the market. Historically, we're a 60-40 market split in the favour of off-plan. Of course, you're going to get that because Dubai is so young, so much development coming in. With the pandemic, it started to slow down. Even pre-pandemic, off-plan was really slow. It started to peak back up or build back up about 18 months later. Now, it's going gangbusters. Right? It's not slowing down. Launch after launch after launch, and now you're seeing those sales trickle in. And whereas before you'd probably see a 2 to 3 month lag on those registrations from the developer launches to sales, a lot are coming in within 30 days.
Can I ask a question, Zon? Our previous guest, Dr. Saravak Shuri, was chatting off-air to us. She's based out of Washington, about the real estate market there. And one of the challenges is nobody's selling. If you own your house in the United States, it's just not going on the market. Now, different dynamics there to hear. Is there an element of that, though? Nobody wants to sell their existing house or apartment at the moment.
100%. So, again, with two markets here, it would look very differently if we didn't have an off-plan market right now. There's a lot of people that, sure, the prices have increased. They could cash out right now on the villa, townhouse or apartment they have, but they've got nowhere to go. Right? Where you're going to sell your place, maybe you rake in a 20, 30% profit on it, but there's nowhere to go. Even if you're going to rent, rental prices are so high. Unless you're repatriating or you're leaving Dubai or you don't need as big a place, people aren't selling. In the US, I mean, it's driven more by, if you're locked in a great 30-rate fixed mortgage, you're not going to refinance or move now and go up 2 or 3% in your rate. So that's one of the fundamentals in the US that's different to here. But it really is, there's just not enough that's ready for someone that could move right now or could sell right now to move into.
People aren't selling, but people are wanting to buy at the moment. Where are the buyers coming from?
It's all over. Look, probably the amount of people that are current residents is tapering off a little bit. Big influx from Europe. Europe's not exactly great with taxes and everything that are going on there now. You're seeing a whole lot come in from there. Russia continues to be a strong one. We've got reports from some of the developers where 20, 30% of their sales in projects are to Russian nationals. Doesn't seem to so far be affected by the rate of the ruble. no slowdown reported in sort of the last 30 days or so. Whether that's because they already had dollars in hand, we don't know. And then the brokerages are also reporting big uptick in non-resident purchases, people that are either new residents coming here, planning to come here, and then investors as well.
What's the timeline, though? I mean, in terms of that population growth and the supply of houses as well, because there's obviously not enough for the demand out there at the moment. How long is it going to take?
So when you launch a project, if you're really quick and it's an apartment, 12 to 18 months, and that's super quick. Right? You're probably looking at a typical build cycle 18 to 36 months on average in that range. You've got record amount of launches coming on right now. Population, yes, is we're higher and there's not enough supply. But in 2 to 3 years' time, we may run the risk of being oversupplied. That many launches coming on. I'm not going to be popular saying it. Last year we had 53,000, 55,000 in that range, new units launched by developers. We've passed that this year. We passed it 2 months ago. So that pipeline, that's the strongest we've ever had, that 50,000 plus, stronger than the early days, right? So you've got so much in the pipeline coming. If you look at the numbers now, total housing stock, total population, there is an imbalance. It's oversupplied, but a big chunk of that hasn't handed over. So in 3 years' time, population needs to keep on its current trajectory, or we could find ourselves in a very interesting situation.
What was our percentage of the day yesterday? 63% of residencies?
Oh, there was a story in Gulf News saying there'd been a 63% increase in new residence visas issued in Dubai over the past year. We crunched the numbers. We couldn't get to that number. We could get to about 6 or 7%, but not 60%.
Yeah, I mean, is that net? Is that just new additions, and then we're looking at a whole bunch that left?
Yeah, go and find the newspaper from yesterday, because we were scratching our heads on that one.
It's always interesting on the population numbers because it's total population, and that includes all different types of workforces. So that's white collar, blue collar, and then all the labourer jobs and labour camps. That really throws a spanner in the works when you're crunching some of those numbers. What we want to see is that when the product that's being launched, that the population is growing with the people who are going to absorb that product. They're going to buy that product or rent that product.
But the big question will be, will the price go up in tandem with or not? Is the price going to continue to rise?
We went up just under 2% last month. We're now 1.4% away from the market peak. Every market's got to come to an end at some point, and they can only go so high. We'll keep going. Right? We don't know where the end is in sight. But looking at the data, looking at historically we are, looking at population, looking at launches, I think we're getting towards the top. Not going to say it's 3 months, 6 months, but we're definitely starting to get towards that top. There is some slowdown in that ready property market. Prices have started to taper down because people aren't selling maybe, but it's topping in some areas. Another 6 months, another 9 months to the run. If people keep coming, if demand stays high, it's really hard to pick.
And again, I mean, I was at the dentist yesterday, rebooked my 6 month or whatever, and they said, OK, I'll see you in April next year. I was like, you what? I mean, time turns around pretty quickly. We've only got 3 months left of the year, so more records before the year's out?
Oh, yeah. I mean, so that transaction one, we're going to blow past that. And then so the launches, we've already gone past. The number of transactions for the year, we're 10,000 away from last year's number, and that was only a few thousand shy of the all-time record. So next month and the month after, transactions, all-time record. Prices, 1.4% below. We're going to come past that in the next month or two. Don't see that really. It might slow a little bit. Not going to see 2%, 3%, but we're going to surpass that pricing record. The big sales price one, beating that 600 million mark that everyone likes to talk about, we've got properties from developers at $750,000 and up on the market. That record's also likely going to tumble at some point.
Zan, you're a good man. Bless you. Thanks so much indeed for coming in. Thanks for the report as well. Zan in from Property Monitor.